Hi everyone. Today, we're going to break down the actual market structure on the 5-minute time frame. We'll explore the power of reading candle momentum and the bulls versus bears mindset. Let's focus on how to start day trading as a beginner in 2026 Part 2 right now. Looking further back on this 5-minute wave, the bias was actually bullish. So, when we switch back to the 5-minute time frame, we will zoom in to see the candles more clearly. In a phase like this, if it's leaning bearish, we could enter a sell order here with a stop loss above this zone. The price only needs to reach this level for us to hit a 2R ratio. This means the distance price needs to travel to achieve a reasonable ratio isn't so large that it requires analyzing distant, long-term historical data. Even on timeframes higher than the 5-minute, analyzing the previous stages here is almost unnecessary for this specific trade. That is exactly a common mistake that we need to avoid. Returning to this phase, we see a picture that is currently biased toward the downside. As I mentioned earlier, in the morning, I only need to scan which assets have a clear momentum favoring one side, then mark them for closer observation. Since I can clearly see the momentum shifting to bearish after a prior rally, I'll mark this asset to wait for the afternoon or the start of the London session. I will continue to wait and monitor it. For assets with unclear trends, I can simply ignore them and save time, only checking back the next day. Right now, around 8:30 a.m., I'll let the price run and observe the developing picture later. Looking at it again here, there was a prior downward impulse that created this bottom, followed by a retracement and sideways movement. Then, a bearish wave broke down through all the previous lows. Specifically, it broke the lowest support level right here. Once the price broke through, it entered a smaller consolidation phase. We can see this consolidation as a compression phase with higher lows and lower highs. Following this compression, a strong red candle broke sharply below these support levels. Crucially, it also breached the absolute lowest point of the entire sideways range. This means there are no more dangerous support zones immediately below. At this point, it could actually be a great entry for a breakout trade where price breaks out of a specific zone. We could enter a sell order at this breakout candle since it has already cleared the bottom of the consolidation range. We would place the stop loss above this zone. Alternatively, we could enter when the price retraces to the most recent broken support level right here. Both are valid entry options. However, it was only around 11 a.m. then, and my usual trading hours start in the afternoon after 12 p.m. In reality, I wasn't watching the market during this specific phase, but looking back, we must visualize whether it was a logical entry point to gain experience for next time. In this case, it remains a highly valid entry based on what I've shared. Using the bulls versus bears logic, we clearly see that after the bulls' strong offensive, the bears' wave broke through the bulls' key base. Then, both sides fought within this sideways range to test if any bullish strength remained. The bulls' weakness was exposed again, as they allowed the bears to drive the price down through their base here. This led to another battle between the bulls and the bears in this area, to test whether the bears' strength was truly dominant this time. When there's a sign of a break through the bulls' base, the bulls naturally step in to try and push the price back up. Meanwhile, the bears are attacking downward, which is what creates this tug of war. This phase was then confirmed by the bearish candle breaking out of the sideways range. Of course, the market doesn't always move simply enough for us to easily read the bull and bear forces. There will be times when the battle is completely chaotic. With price whipping up and down, it becomes impossible to analyze either side's strength. That is exactly when we should stay out of the market. Our job is to dig deep and find opportunities when we have solid evidence, and avoid the market when we don't. In this scenario, the struggle between bulls and bears is very logical, showing that the bears are clearly winning. And that is the time to look for entry opportunities backed by evidence that increases our win rate. Tired of staring at your screen all day only to end up in the red? It's time to level up. Start applying the bull-bear law mindset and our 5M, 1-5M timeframe coordination as shared by Gold Scalping, Edge Trade to maximize your benefits. Don't forget to hit like and follow so you won't miss out on our upcoming battle-tested day trading strategies. Let's win together.